Okay. Right. Okay. Now, this is a meeting which is being held in public, as our committee meetings are, and it is being live streamed on YouTube. So, okay, the first item is apologies for absence. Do we have a number of apologies?
Yes, we did receive apologies from Councillor Len Ellis-Brown.
Okay, and I've got a message from Councillor James Brooks that he will be late. He should arrive around about 6 p.m. Could I ask the officers who are present to introduce themselves?
We've got microphones at the moment.
Oh, okay. No? Oh. A little pause for the moment. We have another technical glitch. It's just being sorted out.
Oh, there is. Jacqueline Case, Performance Management Officer.
Reem Burton, Chief Internal Auditor.
Juna Shufka, Group Accountant, Technical.
Yes, Andrew Smith, Head of Housing and Communities.
Samantha Wilson, Head of Finance and Performance.
So I'm Dominic, Director of Resources.
Monica Balaj, Democratic Services Officer.
Thank you. Right, the next item agenda is the minutes. Have we all read the minutes? Are we all satisfied? And do we agree with the minutes? Thank you very much. Next item is declarations of members' interests. Have we anybody can declare any interests which could impact on this meeting?
Do we not just do our usual interests?
Sorry?
Do we not just put in recycle the usual interests rather than having to go through it?
So I can't quite hear.
I said, do we just say usual interest so it can be reiterated, so instead of having to reiterate it every time?
But you presented interest previously.
Yes, I have, yeah.
Okay, and that's recorded somewhere. Okay.
Yeah, it will be.
Is that satisfactory to head services? Yep. Okay, then. Thank you. Announcements. Chairman's announcements. You'll note that we've had a change to the Constitution. The terms of reference, previously called functions of the Audit Committee, are now called terms of reference. Basically contains the same items, but slightly, I think, clearer. And this is based on my attendance at a number of LGA courses. We've tried to align with other councils, and it's plus two additional items. One is to consider the robustness of the council's capital strategy, investment strategy, and treasury management strategy, and most importantly, to report to full council annually on the work undertaken during the year by this committee. So we will provide a report which goes up to full council. Now, to support these changes, I've prepared the forward work programme with a column describing the assurances being sought for each item. We can discuss this further under agenda item 10 when we get there, if need be. Now, I'm also aware there's an exempt item on the agenda. I've got a little bit of text to read out, so I think it's correct. Members will note that item 8 on the agenda contains an exempt item appendix on page 119 to 121 of the private agenda pack. The Director of Resources will present his report, which can be discussed before we enter the exempt session. I will then propose we go into the exempt session. Any members of the public will be asked to leave, and the audio minutes and YouTube recording will be paused at that time. At the end of the discussion in relation to the exempt item, we will go back into the public session and finalise the noting of that agenda item. So I think we can now move on to agenda item 5, which is the audit planning report from our colleagues who are on video screens in front of us, Hassan and Sunny. Do you wish to report, gentlemen? I think we've lost them again. Can you hear us, gentlemen? No. I'm sorry for the pause again. We still have some technical glitches in the system. We have a plan, the way forward. Okay, we're gonna, I'll put it nicely, park this for a time till we get to the exempt item where we may be able to set up the communications with external auditors. So we're going to move on to agenda item 6, which is the internal audit annual report and opinion. And I would ask the Chief Internal Auditor to make her report, please.
Thank you, Chairman.
So the main purpose of this report is to provide an overall opinion on the adequacy of the council's governance arrangements, risk management systems, and overall control environment for the financial year 2024-25. It's also to summarise internal audit's performance, including against our key performance indicators. I'm really pleased to be able to provide an opinion of reasonable assurance over the control environment for 2024-25. It's based on a number of factors, including the audits delivered, follow-up of any actions and responses by management to any of the findings reported, ongoing advice and liaison with management, and of course the work of Milton Keynes Council on housing benefits council tax business rates. So we take a lot into account when forming the opinion. The bulk of this is based on the audits that we've delivered, and during 24-25, the majority of audit opinions issued were of reasonable assurance, which you'll see on a graph in paragraph 5.3. We've delivered a similar number, well, in fact, the same number of audits in 24-25 as we did the previous year. So I'm pleased that the majority of the audit opinions still sit within reasonable assurance, which is a very positive audit opinion. There were two partial assurances within the year. One was in relation to alcohol licensing, which I should highlight again was requested by management because they were aware of potential issues within alcohol licensing. So we went in to confirm that, and really pleased to be able to report that all of the actions agreed as part of that audit have now been implemented. But for good practice, we will carry out a follow-up audit of that area very shortly. The other area was housing allocations, and that was purely to do with a required document. So everything in housing allocations was operating as we would expect it to, but there's a legal requirement to have a tenancy strategy underpinning everything that's happening. I'm really pleased to say that that strategy is now in place, and the head of housing is actually here if you want to ask any questions about that. So overall, I'm really pleased to be able to give that opinion. I'll pause there before I go on to our progress report in case you have any questions about the annual opinion. No? Okay. I will carry on then to Annex B, which is our Q4 progress report, during which we issued 9 audits, 2 of which were of substantial assurance relating to key financial areas, 5 reasonable assurance, 1 partial, that's the housing allocations that I just mentioned, and 1 audit with no opinion on it because it was a piece of a lessons learned piece of work. I wasn't going to go through them in any detail, but I'm happy to take any questions you may have.
Do we have any questions? I have a question regarding the housing allocations, if I may ask Andrew Smith. The tenancy strategy, was that just an oversight being missing? Did it impact on any of our work?
Yes, thank you, Chair. I worked for the council between 2008 and 2016, and in 2013 I produced the council's first tenancies strategy. It was a government requirement at the time. It sat on the shelf happily for 10 years and nobody took the blindest bit of notice. It's one of those policies that was introduced particularly for stock owning authorities. The tenancy strategy, if you look at it, basically sets out what we expect of our registered provider partners in terms of allocating homes and running their tenancies. And so looking at neighbourhood councils, our sort of sister councils, one hadn't updated theirs since sort of 2012. So it was very interesting, and I was very pleased that internal audit picked this up because none of us would have ever realised that we needed to have that sort of current now for the allocations policy, which is the living working document for housing allocations to sit under. So immediately we refreshed that policy, we consulted with our registered provider partners. It's now up and live on the website. So in answer to the Chairman's question, sort of did it affect our work in any way? No, but the risk was we could have been subject to some kind of legal challenge on our allocations policy if we hadn't got an up-to-date sort of tenancy strategy. and so we've immediately rectified that. And I've been in housing for 26 years, and it never crossed my mind.
Thank you. Yeah, if I can ask the Chief Internal Auditor another question. This is regarding page 74, 1.45, I think it is, about disclosure of all available information. This is to do with professionals such as finance, legal and procurement. Now, has any procedure been introduced or requirement to make sure they do full disclosure? And also, what was the impact on not giving the full disclosure?
Thank you. So in terms of the formal processes, there aren't any formal processes as such, but the relevant teams are now aware that if they are asked for advice, to make sure to double check that they've been given all of the information before they provide that advice. It does go both ways, but it's sort of easier for the professionals to say, what's the reason that you're asking this? So everyone's very aware of that now. What was the impact? It was simply that advice was given that perhaps, and we can't confirm this, but it's possible that the advice would have been different had the full circumstances of the situation been shared with those professionals.
Thank you. Do you want
Thank you. On an unrelated matter in respect to the item, but if I could just raise the issue of the most recent GDPR breach in relation to the planning department, would you be kind enough to explain what action is being taken to address that?
Yes, I've spoken to the Section 151 officer and the head of finance and performance today, and we've agreed that a task and finish group is best to lead that piece of work because of the internal knowledge involved there. However, we will then pick this up I meet with each head of service every couple of months. I will check on my next meeting with that head of service what has been done to make sure this doesn't happen again. If I'm not satisfied, then we will conduct a full audit at that point.
Thank you. I think that's most appropriate.
any further questions? Councillor Joy Dennis?
Yeah, just a quick question, completely unrelated again. Given the fact that external auditors have raised a new risk around the migration of the cash receipting system from Micon to SmartPay, was this on internal audit's radar, or is it on their radar now?
Yes, it is. We actually conducted an audit of the cash and bank, as we call it, just before they went over to the new system. And we have another one coming up to we're allowing a minimum of 6 months for the new system. And we're auditing it again to make sure that the controls are as robust as they were before. So yes, we're very aware, and that's why it's come up again on the audit plan repeatedly.
Thank you. Any further questions for the internal auditor? I will say that we had a meeting earlier today, Rena and myself. I just wanted to make sure myself that the internal auditor is independent, is adequately resourced, and I'm satisfied, very satisfied that we're in a good position that way. Okay, so what we're going to ask to do is to note to be satisfied with the contents. Do we agree? Okay. Thank you very much. So I've lost it. Yep. Right. I think it's Jacqueline who will be giving that report.
Thank you, Chair. So this report contains the annual governance statement for 2024-25. Since the draft AGS was presented at the Audit Committee in March, some further minor updates have been made to that statement. These include, under Section 6, the inclusion of the internal audit opinion for risk management, and an additional statement at the end of the documents that highlight that we will review and amend this statement were there to be findings in the external audit which impacts that statement. The statement's now been signed by the Chief Executive and the Leader of the Council, and an update of the action plan will be brought to Audit Committee in November. Are there any questions?
Any questions, councillors? No, I think we're quite satisfied there. Thank you very much. Right, so we move on to agenda item 8. Yeah, sorry, I better, yeah. So we going back to agenda item 7. We've got to note and be satisfied with the contents. Oh, do we agree? Thank you very much. So now we can move on to agenda item 8. Risk management quarterly update, and that's going to be given by Jacqueline again. Okay.
Thank you, Chair. So this report covers the Q4 corporate risk register. Updates have been added where possible, where we're aware that we've nearly come to the end of Q1 by the time we're at this meeting. So although it's our Q4 update, we have tried to add those extra updates in there where we can as well. All the risks are detailed in Appendix A. We currently have 7 risks considered to be red or high risks. It means they're scoring 15 or more on our risk matrix. This includes an exempted risk, which we'll cover in the exempt session. So of those 7 risks, we have 001, which is our benefit subsidy claim. The pre-audit outturn of 0.34 for 24-25 gives us very little headroom, so that's remained red. 003, which is about rising costs and lower income and the impact on the budget. 004 was around funding from government impacting the medium-term financial strategy. So we have got a balanced budget, but it's using 0.9 million of funding from the guaranteed grants. We'll have a budget review in the summer before setting the 26-27 budget. 009 is the local plan. This risk is clearly under close review. And since the writing of this risk register, our position is obviously continually changing. We've included an update in the quarterly review section of that risk to reflect this. The risk rating has remained red, and it's critical for its impact. The likelihood score also went up in Q4, and we would anticipate that changing again for Q1. The facilitating appropriate development, known as the FAD document, is being updated to help shape development proposals coming forward in the absence of an up-to-date local plan. The risk will be re-evaluated to reflect the position of the council in Q1. 018 was the capital refurbishment, and that remains red for similar reasons as last quarter. We've added 1 additional risk to the risk register in relation to the local government reorganisation. And 1 risk has decreased, which is our office move. It was still a risk in Q4, but will be removed from the register now. We've successfully moved the server across as well. Are there any questions on risk?
Councillor Dennis?
Yeah, if you don't mind. 09, local plan. You alluded to the fact that Q1 that will potentially change, up or down. You didn't allude to.
I think it will very much depend on outcomes of discussions over the next few weeks. I don't think I can tell you an answer to that right
I think
now.
the officers are...
Because we didn't get okay.
Yeah.
When will we get a better feel for that?
Well, I'm hoping soon. But, yeah, but George is as much out of the picture as I am at the moment. Okay, and hopefully that will change in the coming weeks, where we are and how it's going to be dealt with. But the main risks we've got are local plan and the local government reorganisation at the moment.
Yeah, well, that's the one I've got
Yeah.
about the organisation. And I can see that we. Do we think the target was really realistic?
It could go either way, couldn't it, really? Depends how it's the impact on us. And I think it's a cautious view, I think, from my, when I looked at it. Sorry, Councillor Anthony?
Thanks, Chair. I'm just going back to 001, the benefit subsidy. And this is something that has been on here and read for some long time. I'm just wondering what sort of progress we're making in getting that down and out of the red.
So I can give you an update on where we landed with the 24-25 provisional sort of subsidy claim, and we were under the threshold for the LA error, but obviously that's the pre-audit position, and we don't know what will crop up in the audit testing, and we don't know how big an extrapolation that will be. So it will be red because we expect there to be some minor errors in there. Consistently over the last 4 or 5 years, we've had some small errors in there. It depends on the size of the error and the size of the sample and what that extrapolation looks like. But it's quite possible that will then lose subsidy, just as we did in 23-24 when it went over the lower threshold, but not above the upper threshold. The previous year it went above the upper threshold. So historically and regularly, not just at this authority but at others too, we're finding more and more likelihood of losing some amount of subsidy. So last year it was £65,000. I mean, obviously I'm always hopeful that we don't cross that lower threshold, but I can't sit here and say we definitely won't. So therefore it's still a red risk because it could be 200, 300,000 in theory.
Thank you.
Any other questions, councillors? Councillor Dennis?
Yes, 011, cybersecurity and business continuity. Can I just ask the question, are we being slightly optimistic? Aren't most organisations at least at some level of red? I'm throwing it out there. It's the first one I've seen Amber, let's put it that way.
We will go away and consider that in that context. Absolutely right to challenge and question that, and we will review and revisit.
And to be honest, I'd expected it to see it as a red, because I haven't seen anything else that's not a red. So we're obviously doing something marvellous then.
Andrew?
Thank you. Going on to somewhere. Oh, yeah, the rapid 003, rapid rise in cost of things. At the scrutiny for finance resources, I think Councillor Hogben raised the fact that we've had £1 million reserved for inflation. And I think that there's thoughts about moving that now somewhere else. I'm just wondering, with what's going on at the moment and the possibility of all sorts of other inflation, whether we should actually leave it there and use it for that.
Yes, so currently at the moment it hasn't moved, we've left it there. There is a lot going on, not just at this council but nationally and internationally that can affect that very, very easily. Inflation has stayed, I think, relatively the same today, hasn't it? And everyone was expecting it to fall slightly, and it hasn't done. And of course it can easily go up. And year on year it does have an impact on our costs and certainly with extra things like the national insurance contributions, etc., that we will now end up funding ourselves rather than through government, as we've seen in the last settlement, where they gave us a paltry, 150,000 out of 500,000. So yes, there are lots of things like that, which is why I would probably err on the side of caution, which is why we've got it in there as a reserve, an earmark reserve, just in case. But ultimately, I suppose it doesn't matter exactly where it sits, because even if we earmark it, it sit in our general fund and still be there, because its general fund reserves are still above our 6 million minimum. So although we've sort of earmarked it for that particular purpose, we may look as we move along over the next few months to see whether we want to keep it there. It doesn't have to be all or nothing, so we could move half of it out and leave half of it there. So all these things in reserves and earmark reserves, we try and review every year to make sure, do we still need it? Should we increase it or decrease it? Have we used it? Has it just sat there? Are we going to use it? Do we think we ought to have a different reserve in there for something else? These are all the things that the finance team works, very hard on each year. So that's a long-winded way of saying yes, we'll constantly review it.
Thank you.
Any further questions? Okay, we'll move on to the exempted item now, which is pages 119 to 121, and this paper is exempt. So, as chairman, I move that under section 100A of the Local Government Act 1972, the press and public be excluded from the meeting for this item of business, on the grounds that it involves the likely disclosure of exempt information as defined in Part 1 of Schedule 12A of the Act by virtue of paragraph 3 in brackets information relating to the financial or business affairs of any particular person, including the authority holding that information, and in all the circumstances of the case, the public interest in maintaining the exemption outweighs the public interest in disclosing the information. Do I have a seconder? Tony Franklin. Councillor Franklin was first. Just. So, all those in favour? Yeah, okay, thank you. So, members of the public, we've got to leave. So Councillor Lindley. All those in favour? Thank you. So the members of the public may come back in and we can unmute and continue the live stream on YouTube. So to conclude on this agenda item, which is agenda item 8, right, we agree that to note I'm satisfied with the contents of the report. Okay, do we agree? Agreed. Thank you. So we'll move up now. We're hoping to be able to go back to agenda item 5. For the external audit planning report. I propose we adjourn for about 10 minutes while I sort out the technical problems. Can I have a seconder for that? Yeah, agree.
Is it possible to move to agenda item 9? And then reverse to
Because we need to live stream.
They need the tech
Yeah, that's it. This is tech.
going while they're trying to fix it.
Right.
now again. Okay, so and hopefully we can hear our
So on page 5 of the report, it sets out the context in terms of the reset of local government audits and outlining the communications that have been put in place by MHCLG, and also the different phases as part of the reset process. It starts off by highlighting that there's that guidance is still being awaited for in terms of the processes which needs to be undertaken in relation to building back assurance. Recently, however, the National Audit Office have published one of their local audit reset and recovery implementation guidance, which are known as LARIGs, which has outlined kind of guidance for auditors in terms of the procedures that need to be undertaken for rebuilding assurance. And as a firm, we'll be now reflecting on that guidance and issuing out some further guidance internally in terms of how we take that forward. So I just wanted to make members aware of that recent publication. It's available on the NAO's website if members are interested. You'll be aware that for the 23-24 audit, we did issue a disclaimed audit opinion. However, we did undertake procedures to gain assurance over a number of the closing balances, and in our audit results report, we did set out the areas where we'd undertaken procedures over closing balances. However, that does mean that we don't have full assurance over in-year movements for 24-25. So whilst we'll be continuing to rebuild assurance and now taking account of the guidance which has recently been issued, we won't be able to obtain sufficient assurance to over all closing balances. So we expect to issue a disclaimed opinion for 24-25, which I did explain the considerations in respect to that at the last meeting, which I was in attendance at. Moving on to our page 7 and 8 of the report, we set out there the risks that have been identified as part of our planning procedures, and also the areas of focus. We highlight where there's been a change from the prior year and provide a summary of what the risk is and the reasons for identifying the risk. Focusing on areas where there's been a change in risk assessment from what we had in the prior year. The first one of those is relating to the pension asset valuation. It is a significant estimation and judgments involved, including the engagement of from the council side of an actuary in terms of assessing the assets and liabilities of the pension fund and the related disclosures, and then making the accounting transactions within your financial statements. We've increased the risk in this area due to adjustments that were made as part of the 23-24 financial statements. So we've reflected on those and increased the assessment for this year. The next one on page 8 relates to IFRS 16. So that's accounting standard relating to leases, and it's applicable in local governments for periods beginning the 1st of April 2024. So as it's a new area, we've identified it as an area of focus for this year. And the last new risk relates to the migration of the cash receipting system from Icon to SmartPay. So having a change in system can impact on the recordings as a result of one of the key issues there in relation to data transfer. So we've identified that as a new risk and as a significant risk. Or I should have said that I said IFRS 16, we'd identified that as an area of focus. We've actually identified as significant risk. So apologies for the incorrect terminology there. So that's a summary of the risks that we've identified as part of our planning procedures. On page 9 of our report, we outline the materiality level that we'll be applying in undertaking our audit. So the overall materiality level is £1.47 million. So any error or misstatement above that level will be deemed to be a material error and would impact our opinion. The performance materiality level of £1.10 million is the level which sets our testing strategy. So that really drives our sample selection, our sample size methodology, and then we've identified that we'll be reporting any differences that we note during the course of the audit above £74,000. That will be our reporting threshold to the committee. On page 10 of the executive summary, we outline provide details on our audit scope and what our responsibilities are. And over the page on page 11, we highlight our responsibilities in terms of our value for money reporting responsibilities. Section 2 of the report provides more details on the risks which are summarised within the executive summary, providing more information on what the risks are and the procedures that we'll be undertaking to address those risks. In section 3 of the report, we provide further details on our value for money reporting responsibilities, the criteria which we have to report against, the procedures that we undertake in undertaking our risk assessment, and based on the procedures that we've undertaken today, we haven't identified at the planning stage from the work we've undertaken today any significant weaknesses in the council's arrangements where we may be, if we had identified any such weaknesses, where we would then be undertaking additional work to assess whether the identification of the weakness did result in an actual significant weakness. Section 4 of the report provides further details on the materiality levels, and on page 24 we request that the Audit Committee confirms its understanding and agreement of those materiality and the reporting levels. Within section 5 there's further information on the scope of our audit. Section 6 provides information relating to our audit team, including areas where we may be engaging the use of our specialists and considering the work of management specialists. And then on section 7 of the report, we outline the timeline in terms of when we're looking to undertake our work and report on the results of the audit. In section 8, we confirm our independence, so there are no issues that we've identified that causes a conflict in terms of our independence as your external auditors. And section 9 of the report outlines our are the appendices, which include, as well as the PSA responsibilities, details on the auditor fees, and also a comparison to the previous year's fees, and details on in Appendix C, the required communications which we undertake in relation to what we have to report to yourselves as a committee under required standards. Happy to take any questions which members may have.
Councillors? Anthony, Frank?
Hello. Firstly, thanks for that summary of the audit plan. Really, just for my understanding, really on the pension asset valuation and the adjustment that's quoted in there. I think it's page 16. I think I understand that some changes in guidance on how to account for stuff, but I just need a bit more information on perhaps helping to understand that from one of you or even finance. That would be helpful to me.
Yeah, so in the prior year, in the work which we undertook, there was an adjustment that was reported. Sunny, would you like to give some more background in terms of the adjustment that was identified in the previous year?
Hi, yeah, sure. So on page 16 of our report, it details the adjustment. So there were two adjustments, one from the pension fund auditor raised a point around the adjustment for one of the assets in effect, so we had to account for that adjustment, the authority did. And the other one is the adjustment the authority recognised around the asset ceiling, which was about £49.6 million to reduce the asset value to bring in line with IC 14.
Thank you.
Okay, councillors, I hope you're all clear on that. Any further questions? Councillor Dennis?
I won't explain the other one, even because I do now understand the difference, but it's my register of interest, so I can't. So the first one I was going to ask was about the valuation of land and buildings, which is done on a rolling 5 years. Is there ever an exception to that you feel is appropriate to pull out because of market conditions, for example?
So, in terms of the code requires that authorities undertake a rolling valuation on at least a 5-yearly basis. So, in doing that, the council should assess whether or not a more frequent valuation would be warranted, particularly if there are indicators where there's been a significant change, then management may wish to bring certain assets forward for evaluation, which were previously identified for being undertaken later on. Sort of 5 years is a minimum, but on an annual basis, you'd expect there to be an assessment being made as to whether or not there are certain assets which maybe a more frequent valuation should be warranted. And obviously for investment properties, then investment properties need to be valued on an annual basis.
Okay, thank you. Can I carry on with questions? Only two more. On the lease side, I just wanted to know, have you actually looked at all at the work that's been done on leases so far to ensure that actually there is a system and a process in play that you will be looking at?
We've undertaken some work at the planning stage, and Sunny will be able to provide some more detail in terms of where we've got to in respect to that.
Yeah, so we did have an initial review of it. We had some queries which we sent back to authority just to look at, and we are plan to relook at it when we're on site in about 2 weeks' time when we start the audit again.
Fine. So nothing significant then.
I couldn't comment on that just yet, but without kind of going into it in further detail.
Okay. And then the last question I have was it was the terminology and actually the fact that it came up on a number of occasions where you actually state that there's significant risk, and actually that's the reason you want to particularly look at what you're going to do, and that is the fact that you seem to use the word inappropriate capitalisation as a risk between revenue and capital quite significantly, and also use it in the same terminology of manipulation of revenue funded by capital as well. Is that just, it looks rather bold, or is there some subtext to that?
It's a risk which we identify on all our local government audits, and it's because a way of effectively reducing any expenditure which may kind of hit your general fund will be to capitalise it. So it's a risk that we identify across all our local government audits.
It's a standard text. That's fine. Okay, thank you very much.
Any further questions, councillors? I've got one question, which is on page 36, and that's regarding the fees. There's a note there which says subject to PSAA approval. This is for £35,000, and has that approval since been received?
We've made a submission to PSA, but haven't had any outcome in terms of their determination. So it's awaiting their determination and approval.
Okay, thank you. Councillor Dennis?
Yeah, just one last question, really. Are you on schedule in terms of your audit plan?
Yes, we've undertaken our planning procedures, and as Sunny's just outlined, we're scheduled to be coming in a couple of weeks' time to start our field work.
Good. Okay.
So at this stage we are, but it's early days in the audit process.
Appreciate that. But thank you.
I've been asked to ask you about EY real estate.
Sorry, could you repeat your question again? It kind of broke up. Sorry, Chair.
Oh, is EY real estate on track?
Yeah, so EY Real Estate have been engaged to look at the valuation methodology of the car box. They will be in contact with management soon to discuss the valuation methodology.
Okay, thank you very much. I now understand.
Thank you.
Any further questions, councillors? Nope. Okay, I think we can move on. I noticed we've been requested the audit committee confirm its understanding of an agreement to these materiality and reporting levels, which is on page 24 of their reports. Do we agree? And we can also note that we are satisfied, with the contents as they're presented to us. Okay, we agree? Thank you. Thank you, gentlemen. I'm sorry about the technical problems and which has delayed your presentation. Thank you very much for coming along.
Thank you, Chair.
So we can now move to item 9, which is the Treasury Management Activity and Prudential Indicators 2024-25 outturn, pages 123 to 136 of your pack. Can I ask the officer, Julian, to present?
Yes, thank you, Chair. This is the annual report we have on the outcomes for 24-25 against the strategy for capital finance and treasury management. The original strategy was recommended by this committee in December 2023 to go to council in the budget report. It was adapted slightly because the actual capital that was finally increased, finally approved, changed marginally. But the actual overall strategy was still to finance the whole of the capital programme. It covers a number of indicators and benchmarks. In most cases, we've kept within our indicators, but I do have there were two compliance issues during the year. One we actually have already reported. 1st of August, we went over our single bank limit. At that point, we put in new reminders to staff to get over that issue. There was actually another compliance issue with the single bank limit on the 19th of March, which was totally out of our control because there was a return of an investment which happened after office hours, so we couldn't actually invest it. Normally, we have money returned in the morning, and so we make the investments during the morning. That's the window for us to make investments. So this one we couldn't actually invest in that on that day because it was after the hours that we could. And the next day we rectified the situation. Just to sort of remind you about what the single limit is for, it's really to address the risk that our bank will be bailed in overnight, because at that point some of our funds might be affected. So that's really why we have the overall bank limit. Looking at the capital financing, we were about on what we expected in the estimates. All of the capital programme was financed. There is, you'll see, a line with debt on it, and that would be the first time we've had that really, because that is the effect of IFRS 16, where there's a notional debt that we put in because the under IFRS 16 leased assets become part of the capital programme. So we actually have to include that figure there, but it was there's no borrowing. It's the cash flow is still the same. We're still paying the leasing costs as we did before, but the accounting's changed. As I was saying, all the other limits we're within. You'll see some limits which don't make much sense for us because they're basically borrowing limits, so we don't have borrowing. So those, although we have to show them, they don't actually have relevance to us. On return on treasury, we were slightly over budget because we had the rates actually kept higher than our estimate slightly, so we did have a slight favourable variance there. There was, on the valuation side, just to mention, we have a REIT which has a disappointing valuation. We're monitoring this with our treasury management advisors. They feel it's to do with sentiment about the housing association sector as a whole and not specific to our particular investment, but we're monitoring that. There should be real revaluations happening for the end of March, but it hasn't been issued yet. So that's one we're keeping an eye on. On the property side, the income was slightly better than the estimate. I think that was due to a rent review I've been told by my property colleagues. In terms of property, we have good the vacancy level is very good for us in terms of the fact that it's very low, and we didn't have much of write-offs in 24-25, so that's a positive. But obviously property is valuations are under pressure, and I suppose the income is also perhaps under pressure depending on how the economy as a whole is going, and certainly on the retail side there might be issues. That's all I wanted to really highlight, so if there's any questions.
Any questions, councillors? Councillor Landry?
I've got one question, basically just so I understand it, because in another life I did a lot of leasing. This is supposed to be treated the same now as purchased assets, but so how is this treated? Is that shown in the balance sheet as an asset or a liability? Because it is a liability. Is it just shown as a debt?
I think you get both sides. You get a right of use asset and a lease liability. So it's and the right of use asset. Our understanding is it should be counted as though it was one of our assets. But at the same time we put a liability in, which is paid down as we pay off the leases during the year. So it does actually now appear as a right of use asset, just as our own.
So it's
properties.
qualified as a right to use asset.
Yeah, they call it right of use asset, as opposed to on the other assets.
Thank you.
Any further questions, councillors? We can note and be satisfied with the contents. Do we agree? Thank you. We'll move on to the last agenda item, which is agenda 10, the work programme. I think one councillor mentioned to me about a small change he's requested, and
Thank you. Yes, this is in respect to point E, the monitoring of effectiveness of the council's finance procedures. I have it may be a slight personal bugbear on this, and the reference is to ensure that the highest standards of financial probity and stewardship are maintained through the authority within policies set by the council from time to time. I have a concern with the use of the word highest, since it's very difficult to determine when you have reached an absolute peak, and can I therefore suggest that the word highest is removed and that we meet the standards appropriate to the way in which it's been set by council from time to time.
do we agree, or has anybody got a further amendment?
Thank you.
I also have a similar bugbear, which is the use of good practice and best practice. Too often in reports it's best practice and engineering terms, that's expensive. And then we've got to prove it. Good practice we can prove quite easily. So I'm willing to make the change, and it will be reissued before the next meeting.
Thank you, Chairman.
Thank you very much. I think that now concludes the meeting, unless any councillor's got any further business they would want to mention. I'm trying to find my copy of my agenda. Okay, I've got no urgent business, and we'll then call it the meeting to a close at 8 minutes to 7 p.m.